Hello and welcome. Thank you for watching our presentation today. The law offices of McLaughlin & Associates and McLaughlin Mediation and Consulting focus on helping small to mid-sized businesses grow and thrive. You started your business because of your passion. Let us help you with that vision. We offer a variety of legal and human resources services. Check out our website for more details at www.ma-lawpc.com. And now, on to our presentation.
So on the financing side. So on the conventional financing side, everybody's worked with a bank. We know how that works, okay? If they ask it for it, you know, the issues about stated income and all the problems that some of us have had, you know, I've had discussions with people about, you know, how you deal with your books. All those years that you were saving money, or all those years you were saving taxes because your income was low, is going to hurt you now. Because guess what? The bank is going to look at your income stream and stuff like that. So it's out of your control. You know, those relationships matter, but again, you're stuck with that. So it's heavily regulated and it affects all of our deadlines, no matter what you want to do. So you have to build in your deadlines appropriately. That's why you have a due diligence date, and that's why your close is tied to due diligence. Because if I have to extend my due diligence, now I'm not going to be stuck in a situation, okay? But the problem is if you have any kind of financing, you're not going to get a rush deal. You're not, you know, I mean, I guess if you had the financial wherewithal that you don't need the money, that you could do cash deal or financing, maybe you have some leverage, but usually no. So the good thing about the cash deals, there's no bank, so it could be seller financed or investors, right? Those could be your quick deals. I need to close in 30 days. Theoretically, you can close in 30 days. We've closed some in a week or two. Am I right? Right? You can close them quick. There's no oversight, so you got to be careful with your due diligence. Okay, there's certain things that you don't have to turn over, but you have to be crystal clear about those. Why? Because if I didn't turn it over and they didn't ask, later on someone's going to claim I committed some kind of fraud. Okay, that's how it works. And we won't make any money on the transaction, but we'll make a lot of money in the litigation. Okay, so you don't want to do that. You want to flip that. And again, you know, you can do a rush deal, but if you have a heavily leveraged company, you can't do that because you're going to have to deal with a lot of other things. SBA financing, again, something that could be we could have a whole thing on SBA. So there's the 7A or the 504. So the 708 is your quick one, and your 504 is longer. The only thing I want to really point out on this is you can do a 7A in a couple weeks if your finances are really good. But again, you know, SBA makes its own rules, so I mean, you have to comply. But if it's a 504, it's going to take 2 months. That's, you know, at least, because they have to go through their compliance. So if you're going to get SBA financing, because there's some benefits to that, keep in mind that your better way to go is usually to work through your banker who has an SBA, kind of a lender side of it, so that they can help you facilitate it. On the seller financing side, so we do see a lot of seller finance deals that could be combos between conventional and the other. And a lot of times you'll have seller finance because they can't really get the full loan. So it requires additional protections in the same way as the due diligence issue I was telling you about. So if there's a lender or SBA, the seller's rights could be delayed up to 2 years. You have to keep in mind that you might have a huge nut that you're paying as part of a seller finance deal, and it might be a smaller loan for SBA, but because of the way it works, you have to put the private party yourself basically in a subordinate position. So what does that mean is anytime there's a secured lender, they're going to sell it to get theirs first, which means if they have a little amount of money, they don't care how much money is made on it. They just want to make enough to get them. And so that could be a really bad deal for you. So it's kind of funny, Diana, this is the flip side of the question you just asked, is that it depends on what's going on, right? You know, anytime you have a secured lender who's above you as a seller, that's a bad deal. Obviously, it's better just to be paid cash, but you know, maybe it's not always an option. So you have to have a promissory note. You have to have a promissory note. You have to have a promissory note, okay? There is something called the statute of frauds, which requires written agreements in certain circumstances. This would be one of them, okay? Don't just leave it to the asset purchase agreement or the stock purchase agreement. Have a separate promissory note because you're going to enforce that loan, okay? You have to have a security agreement. I say should because you don't have to. If you have any amount of money that's being extended, does your bank give you your house with no security? No, they can foreclose. Same thing with you. Security agreement is what you want to have. And you want to have a bunch of other things that tie to it. You want to have pledges of interest of the company so you can come and take the company, but then you also want to have blanket liens on assets inside of the company, the equipment, those types of things. Real estate liens and mortgages, sometimes people do pledge their houses as part of these things if they're paid off. The business real estate, all those types of things you want to have liened. The accounts receivable, if the money's coming in, you want to have a first right on that. And then finally on like the equipment, okay? So keep in mind though, sometimes when you're acquiring things, it's already financed, so there's security interest. So you have to be aware of all of these kind of pieces that come together before you start agreeing to this, because you're like, okay, great, I'm gonna give you the loan and I'm gonna do a security interest, and then you find out that everything's already leveraged. So guess what? You can't get anything. And then you're like, I really wanna sell, and they're really good for it, and then you start making concessions, which come back to bite you, because like I said, if they default, who's going to come in? The one who's financing the equipment is going to come in and take it. Well, now they don't have the equipment to run the business. So now the accounts receivables down. Well, I never secured the accounts receivable because their main bank had a control over it, right? I'd love to go after the real estate. Oh, but look, now their landlord, they put something in there. It's just all of those types of things that got kind of put into it. So state requirements. So this first one is a surprise for a lot of people. So an asset sale, you got to get 10 days before the closing date, a CBS 1 to the Illinois Department of Revenue, which is here, and an IDS clearance. Okay, so basically what they want to do is make sure your sales tax and your payroll taxes and your contributions are made. They're going to give you a letter that says that you owe a certain amount of money. You're going to be like, but I paid my taxes, I blah, blah, blah. They don't care. They sent you a letter that says you have it. The only obligation is that you must escrow that amount of money. But I just sold my company for $50,000 and they say, oh, $49,000. That means I'm only going to get $1,000. I know. Here's your check for $1,000. Give me $49,000 so I can put it in the escrow account so it can sit there for a couple months until they figure it out. So there's a couple ways you can handle that. Either one is you just delay your deal to get that taken care of, or two, you just got, it's just the way it is. You got to deal with that, okay? What if there's not enough money in the deal? Someone's got to come up with the money. All right. So a couple other things here in the bottom, and I could have numerous examples, I just picked two. So licensed professionals have to be careful because their numbers may or may not track with that. So I just think about, for the medical field, for example, because they have the MPI numbers, it's not easy for them to transition to business because in order to get paid, especially through Medicare, they have to have those numbers. And if they don't take care of that and they wait after the fact, they could go months without getting paid. So that's a key thing to take care of. And then liquor license is the other I think about when you transition ownership, even by just a couple percent. They need to know it because you can't have felons who are selling liquor and some other requirements, right? So you have to make sure in your industry, I think about, DOT would be another one, right? Drivers, you can't have certain, right? I need to have a CDL. I have to make sure that I don't have a record, those types of things. So that's it on that. Okay. So finally on the ancillary documents, so the non-competes with the former owners, you gotta have those. Do not just say that it's a good person. And some of these things you're like, well, it seems so obvious. It is obvious, but I can't tell you how many times they don't happen. So, you gotta have that deal with them. If they're not willing to sign a non-compete, if you're the buy, if you're buying it, right? If your seller is not willing to do that, right? On the flip side, if you're not willing to sign the non-compete, realize that that's going to be an issue. You should spell out then the account sales, right? I'm going to handle this part and you're going to handle this part. Non-solicitation of employees is actually a bigger deal. When you sell the company, it freaks people out because you're the one. Either because they like you or because, just like I said, people panic and they're like, oh, they're selling it means everything's going badly and stuff like that. So that non-solicitation to make sure that no one can raid. Franchise agreement transfers, obviously, we're not talking about franchise specifically, but if you had a franchised business, you have to follow the whatever they've asked for. So usually they have to vet your buyer, okay? So that's gonna be an issue. The leases with use limitations. So what am I talking about that? Certain plazas have a lot of franchise businesses in there, and they have use clauses that say you will not allow another competing business in there. Sometimes those aren't grandfathered, okay? So let's say that I got in and I'm the first business, okay? Or let's say that I'm totally good, maybe I got an exception. But now I'm selling. The lease might actually look as the buyer as being a brand new tenant. And now it actually is precluded. So you thought you could sell and you couldn't do that. So those are things you got to know in advance. Employment agreements with your key employees. So if you know you're going to sell, now's the time to have discussions to incentivize your employees not to leave and give them those things so that everything's happy and good so that later on, you don't have those issues. If you're having a discussion with your key employees when you're selling, they got real valuable real quick and you're just gonna have to deal with that reality. And then finally, here's one that people actually don't think about, titled documents. So if you have any business that has titled vehicles of any kind, so auto dealerships, right? Mechanics, boat dealers. So finally, we've come to just the basics of closings. Okay, so documents are all signed at the closing. When you're done with the closing, there's nothing left ideally, although things can be. But you can do virtual closing. So I think sometimes people, do I have to show up at my lawyer's office? A lot of stuff's done virtually. E-signing is now a thing. It used not to be. It's only in the last couple of years that you could actually DocuSign a lot of documents. So as much as we can DocuSign, we DocuSign. So that saves you a lot of time. The payments, wire or certified check. So if you have a seller finance deal, you can pay however you want. You can pay with a bag of money, I guess, if you really wanted to, but it's usually a certified check. The wire transfer has to do like with real estate. When you're transferring real estate, when you're coming through escrow, sometimes the wire is required for $50,000 and above because of the wire transfer laws. Okay, so just be aware that if you're doing it, you're not going to be doing it by a business check at the last time. It's going to be a wire. I don't think that's not a big deal anymore. All the IP assignments, so all your intellectual property has to be assigned. People forget this. They think the agreement's going to assign it. It's not the same. So if I have a trademark, if I have patents, those kind of things, those have to be assigned by separate documents. Not a big deal, but then those get filed in their respective places. All the contracts got to be transferred. If you need consents, if you got to have them put in new names and stuff like that, sometimes it's a good way of actually fixing your contracts because they were actually kind of written up kind of junky. But make sure that that's all taken care of so that there's no transition issues. That has been an issue where people forgot to put in a couple contracts that end up being key ones. Oh, well, he knew what was going on, but then the person really didn't know what was going on, the vendor, and then it became an issue. The lease has got to be assigned. Here's a big one, estoppel certificates. When you have a lease, an estoppel certificate, and you have, let's say you're buying a piece of real estate and there's going to be renters there. Even if you're doing it for your own business, but you're going to have some side renters, an estoppel certificate is a document that asks the tenants there to say that they have no problems with the landlord. Because if you don't get that and then you buy it, the tenant's going to come back with all kinds of issues. You're going to go like, well, they never told me that. And the problem is that you should have asked the tenants what was going on because that's part of your due diligence, right? So sometimes that can be a problem. People forget that what if the tenant doesn't need to know I'm selling? At some point they are going to have to know that, right? And then escrow agreements for the outstanding issues. So what am I talking about is there's money escrow, as we know about, but there's actually escrow agreements that said things that have to be done. I get there, for example, and the simplest way we think about when we bought and sold a house, the escrow for the little repairs because the door got messed up, okay? But we're talking about bigger when we talk about businesses. Maybe there's equipment that's not working, okay? Maybe we have transition of financing deals that happen. So there's some businesses I have that almost everything that they have is financed. We can't actually transition all the contracts before we close. So what we have is escrows, and we will have holdbacks that say in the event that certain accounts don't transfer over a certain dollar amount, you're going to reimburse this. Those work well with the seller finance deals because you have flow of money that's coming that you can offset, okay? So as long as you got flow of money that's either being held up or it's supposed to be owed in the future and it goes in the right direction, meaning the one who's owed is the one who has to pay, then it works out. Now, if it's only going to one way, that's a bad deal, right? Because if there's no cash to be had, then you don't have those recourses, okay? So we've come to the end. I did a very whirlwind about the buying and selling of businesses. There's so many areas you can imagine that I could have covered.
Thank you again for watching this informative session. If you have any questions about what you just heard or want to contact us for legal or business consulting services, you can reach us at 630-230-8434 or email us at kmclaughlin@ma-lawpc.com. Have a wonderful day.